Welcome, everybody, to Secret Sauce, the show where we hear real-time insights from commercial real estate industry leaders. I'm Karly Iacono. Today, I am pleased to be joined by John Hendrickson, the president of the Midwest at Brixmor. John, welcome to the show. How are you today?
Good. Thanks, Karly. It's great to finally do this with you.
Yeah, excited you could join us. Thanks for your time. So let's jump right in. Tell us a little bit about Brixmor and your role there.
All right, sure. So hopefully a lot of people know us, but we are a public real estate investment trust, 364 properties right now, about 65 million square feet. I think we're at 31 states total that we are, and I run the Midwest. So that's 76 properties, 16 million square feet, and 11 states. So just your traditional Midwest states.
Nice. We are definitely in a very good space given how strong retail fundamentals are. So I'm sure
Absolutely.
You are loving life more than some other people in the real estate industry right now.
For sure.
Yeah. Now, what differentiates you, in your opinion, from your competitors? We've seen just an amazing attention on open air retail and just incredible demand. So how do you see your unique benefit in the market?
Right. So, I mean, I'd be remiss not to start with our people. We do actually have a core tenet that says that great real estate matters, but great people matter more. So that is definitely true. And I definitely have found that since I've been here at Brixmor. But, what we've been great about is execution. So, when this management team came here in 2016, the property was really underinvested in, the whole portfolio underinvested in. And so since 2016, we've invested more than $900 million at an 11% return. It's created like $750 million of value. And that's pretty low risk because all of those projects would have been pre-leased and made sure our pricing is good and nothing complicated, no complicated mixed use projects or anything like that. So it's just great. It's been great execution from that standpoint. So, and we see that over and over again now. We're still seeing the follow-on effects of that. We've had now 11 straight quarters where we've increased our small shop occupancy, and we're at almost 90%, 89.8% in small shop occupancy. So that's one of the things that we've really been able to, distinguish ourselves on is our execution from a redevelopment standpoint. And the other benefit we always talk about is the fact that we have a low rent basis. We're not having to, deal with anchors and a $30 rent kind of standpoint. We have single digit rents on a lot of the rents that we're having to turn. And so we've seen amazing increases. Actually, this past quarter, we've had a record increase on new rollover spreads. So 56% spreads, meaning when the last tenant expired, the new tenant paid 56% more. And even with the bankruptcies that we've been dealing with, we've been able to, again, partially because of that low rent basis and partially what you're talking about, great demand, even with our bankrupt spaces, we've had a 76% rollover spread on the ones, the Bed Baths of the world that we've had to replace in the Tuesday mornings and the Christmas tree shops that we replaced here this year. So
that's a huge jump. Wow.
Yeah,
huge spreads there.
And it's fair to ask, okay, was the capital outrageous on those? And no, they were basically in line with what we've done in the past. And we've also seen record net effective rent. So I think it's been, that's been a very good result. And we've been able to do this with basically using our free cash flow. So we're not having to go to the external markets much to execute our business plan at all. And our balance sheet has been in fantastic shape, which gives us a lot of dry powder. And I don't know, you might have seen it, but S&P actually just upgraded us to BBB. And that was just something we just announced. And so it's been great.
So if I'm hearing you right, you've been very true to your pure retail mission when it comes to redevelopment. You haven't strayed off course, and you've been finding opportunity within your own portfolio by increasing rents and reinvesting in your properties, which sounds like it's certainly paying off. Now, diving into that reinvestment a little bit, is this renovating facades? Is it new tenant build outs? Like, what did that deployment of capital really look like on an asset level?
Yeah, it's a mix of stuff. So it could be renovating a facade. It could be just converting, a block of space to to maybe a large box tenant. I'll give you an example of a project we have here in the Chicago region. We had a large in the corner of the space, in the corner of the property. We had a large, actually 2-story former health club that was vacant for a long time. We could not figure out how to re-tenant it for another 2-story health club. And then we also had a series of small shop spaces next to it, probably 60,000 or more square feet of vacancy. And we tore that down and put in a grocery store and then a Burlington coat next door for that corner. And then as part of that, renovated the entire facade, re-tenanted basically the whole property, and been able to get more of double-digit return from that. So it's a mix of everything, but again, it's very important that it's low risk. It's not spec. We're not doing any spec building. We're not going to start a project until we have it either 100% or substantially pre-leased.
So you've been very conservative, sounds like,
sure.
as well, while still finding growth. Are you doing any pure play acquisitions? How else are you finding opportunity in the market?
Sure. I mean, last year we bought 9 assets, including 3 here in Chicago region. We're very much about expanding our existing markets, clustering around where we already have assets. We find that we do our best work when we can work on a cluster of properties. But this year we haven't bought anything. We've been very patient with the rise in rates. We're waiting for the market to settle down. So it's not something, we're trying to stay patient and, again, keep our powder dry.
There's a whole lot of patience going around commercial real estate
right
now. Maybe not in the brokerage community, but everybody else seems to be patient. So
yes,
no, I'm just teasing. It's the year. That's the buzzword of the year. Patience.
Patience. It is. It's a good song.
So it sounds like you're ready for 2024 and the opportunities that might bring.
Oh, for sure. That's what I'm most looking forward to next year, is hopefully we can buy some more stuff.
Mm-hmm. Yeah, exactly. And do you think you would expand into other markets? I think your cluster philosophy is interesting, right? You want to really stay close to home or close to somewhere that you have existing assets. Has there been talk of just branching out into brand new markets, or not yet?
No, not yet. I mean, really, there's enough places that we can fill in our existing market that we think we can have good opportunities and great risk-adjusted returns, that there's no reason to do that. Just try to stray at the moment. So not at the moment. You'll probably see us stay in our markets we've already invested in. Still big presence in Florida, big presence in California. Here in the Midwest, even, we find great risk-adjusted returns that have been great. So I think you'll just see us focus on that.
Stay the course. And that's why you're being rewarded with a higher S&P rating, right? Lower risk perspective in the market. Yeah, interesting. Talk to me about your tenant mix in the last few years. Have you seen it shift? You mentioned taking out the fitness facility, backfilling that with a grocer. It's an interesting, trajectory there. Have you added medtail or really kind of changed any of your core tenants post-pandemic?
Yeah, for sure. I mean, wellness is still a huge part. It has been in the last few years, right? There is that traditional still fitness user, but also the boutique fitness has been big. But even like urgent cares have on out parcels is something we've done a lot of, and med spas, the laser services has been something much more recent. Also with that, food has become much more prevalent. Certainly the idea of, especially since the pandemic, quality retailers who traditionally would just focus on urban settings coming out to the suburbs. Like we've done a couple deals with Shake Shack, which has been great. Georgie's Tacos, the Cooper's Hawks of the world. Making food an anchor of a project is something that's certainly been an evolution. So it's a little ironic that both it's wellness and food at the same time, but it can be both. Yeah.
Yes to wellness and medtail, yes to food, and it sounds like more interesting, maybe regional brands coming in to centers in their markets.
Yeah.
Is there a specific concept or emerging brand that you haven't seen in one of the centers yet that you're excited about, or something that you're just starting to build a relationship with that you think has good long-term potential?
Well, I mean, one thing that we've been real focused on is the concept of bringing out traditional mall retailers to our properties. Skechers, we've done a ton of deals, JD Sport, Bath and Body Works, J. Crew did our first Lululemon deal in the portfolio. So, more expanding that, I think, will continue to be an important part of what we do, especially as you see, the B and C malls still struggling. And the retailers seeing that they can really be profitable in our portfolios. And then, we've been focused a lot too on specialty grocer. Our portfolio right now is 74% grocery. We want to keep expanding that, and done several deals with Sprouts and Trader Joe's, and then some local grocery operators. So I think continuing to expand that and to have, especially the ethnic grocers in specific markets, can be very interesting.
You've mentioned grocers a few times. Are you finding that the square footage is coming in for these specialty grocers year over year? I feel like the prototypes keep getting smaller, but maybe that's just a regional difference.
It depends. It's a good question. I mean, it's evolved, and it seems to fluctuate back and forth depending on when you talk to them. So,
right.
I mean, we've done some, 40,000 square foot grocery. We've done some 60. Obviously, have some Kroger's in the portfolio, at 100,000 square feet. So it does evolve.
So you're really taking their lead instead of saying, we believe grocery should be 45,000 square feet. We're going to build it. Who's going to come? You're saying, we like these relationships. You run with your prototype.
Right. We have not been lucky on dictating. Doesn't work.
Doesn't usually work. That's true. Fair enough. So aside from being a retail landlord, which is a wonderful place to be in the market right now, obviously there's a lot of stress in the rest of the market. Have you been affected by interest rates or the stress in capital markets overall, or is that really not come into play because you're able to reinvest proceeds at this time?
Yeah, so for us, no. I mean, as I mentioned, we've been lucky enough that we can basically fund from free cash flow, and so we haven't had to tap externally for growth. We have over $1 billion line of credit that available to us. But of course, the cost of capital has increased generally, so our expectations have increased, and that's why we've been patient on the acquisition front, because the expectations and seller expectations haven't met yet, and I think that's a broad problem in the market right now.
That is for sure. Yes, that's the case. Aside from potential stress in capital markets or bid-ask spreads, are you facing any other challenges in your business? And if so, how are you overcoming them?
Yeah, I mean, obviously, we're starting to solve more bankruptcies this year than certainly we did the last couple of years. But they're all been names that we've been expecting. And, we'll probably get back to, again, a normal course of tenant failures. But from the standpoint, there hasn't been new supply. That's where we're lucky. That's, other product types aren't so lucky, is to have the lack of supply. And so as there continues to be great demand, so that, we've been able to backfill, that's over 70% spread that I talked about on the bankruptcy there. We've been able to backfill when we've had issues. So, that is obviously an issue. We've had, there was always historically the supply chain issue, and the cost of building tenants out has been something we've all had to deal with. What's helpful for us is the idea of working with our tenants. I mean, they want to get open, they need to get stores open. So, if we need to sit down, have a conversation with them about value engineering, we can. and, maybe you don't need a brand new bathroom. Maybe you can just renovate where it is instead of moving it. Those kind of conversations. That all has been a challenge the last couple of years, but it's been something that we've been able to work through with the relationship. So that's been helpful.
Have you seen the supply chain issues moderating? I'm hoping you're going to say yes.
Yeah, it's gotten better, but there's
still difficult.
Yeah, there's still pieces that are, like we still have issues with getting electric switches. Can take months and months. It's random. Sometimes some HVAC is still taking months to get, and so then you have to work around it. It just there's just still pockets of it, which is very strange. Yeah.
And that makes it hard to prepare if it's a random item that's different project to project, right? It's not one thing that we all know is in short supply. It's just individual small item that could hold things up. That's interesting.
Yeah, for sure.
Yeah. So we have to end, of course, on a bright spot. So what is a retail trend or theme? Doesn't have to be specific tenant related, but something that you are excited or bullish about for retail through the next year?
Well, to me, it's the fun stuff. It's the entertainment concepts that are coming. Even a little experiential retail. Like I love the fact that Dick's is doing their House of Sport concept that I've seen. That I love that they're, trying to do something different with a, old concept. Or like the Tiger Woods have a concept called Pop Stroke that I've seen. That's fun. But you play pickleball.
I don't. Not really.
Nobody really does. I mean, it's
I talk about it a lot. I feel like we all talk about it a lot, but
we definitely do. And it's fun. I think it's cool. It's going to be cool to see in the next couple of years these concepts coming out and how they spin it and how they bring food and beverage to it. Chicken and Pickle out of Kansas City does a real nice job. There's new concept Camp Pickle. We've done a couple of deals with Ace Pickleball, which is good. Like they just did one, and they haven't opened yet, but we just signed the lease in Louisville for an old, actually another fitness center that they're taking over. And I think that's going to be interesting to watch how that develops. I tried to play pickleball a couple of weeks ago in Detroit. We couldn't get an indoor court, so certainly right now there's demand for that. And, from a landlord standpoint, not only do you get an interesting use, like in the Ace example, you end up getting franchisees that have experience from other concepts and they're have great financial backing. So to me, that's the fun thing. That's going to be fun to watch of, where does that concept go? And does it have long-term staying power, which I think it does.
And I'd love to see the foot traffic trends.
Yeah.
From a site like that, right? If you open up a big pickleball experience facility, people are coming, they're dining, they're spending time at the center, they're coming and going, maybe they're playing regularly. You're just going to have a whole new crop of consumers coming to your center, I would guess. So
Totally.
Another benefit.
Yeah. And it's totally, and what's helpful too in all of this, and it was with fitness, is that traditional retailers are more open to the idea of having these part of the mix, right?
Right.
And that makes it a heck of a lot easier on the consents front and everything. So it's been great.
Do you have any concerns with parking when it comes to these experiential, like pickleball?
You definitely have to pay attention to it, but I hope, they tend to have their peaks should be different than peaks of other retailers. So you have to, but you do have to pay attention to it, make sure there's a good field. And like in this case, the one I talked about in Louisville was an old fitness club. So it had already had a big field
set up for it.
Yeah.
Makes sense. Good. Well, maybe we'll see you on the court, or we'll check in with you in 6 months and you'll be a pickleball champion in a league. I wouldn't be surprised. Keep us posted for sure.
Absolutely.
John, this was great. I really appreciate you giving us an update on how Brixmor has been doing and the path forward. And congrats again on that S&P upgrade. That's big news. So happy for you all. And I hope 2024 brings you the same, if not greater, level of success.
Appreciate it. Thank you.
And to everyone listening, that was Secret Sauce. We're happy you could tune in, and we look forward to seeing you again very soon. Have a great day, everyone. Thanks again, John.
Thank you.